Hello everyone, this is Brandon from Galaxy Market. For many of you watching this on YouTube or X.com, today is September 21st, 2025, approximately 9:30 a.m. Of course, our community members got this a little bit earlier, but I'm here to talk to you about Rosh Hashanah, which is Monday, September 22nd, 2025, and it's coming, folks. A lot of things have aligned. Divergences cannot be ignored. The bear is now going to growl, and you can see the implications of rate cuts. Both Trump and Powell are implicated on this. We're going to talk about the significance of sell on Rosh Hashanah and buy on Yom Kippur, old wives' tale mantra that exists in Wall Street, and how I believe that is going to actually take effect this week. All right, here's the disclaimer. Pause it, read it. If you agree, please move forward. Of course, my shameless plug on x.com/galaxy.market on x.com. Very, very active there. And we have a growing social media presence on that area. Also, subscribe to youtube.com. And we have a channel there. Also, like, subscribe, and comment. We'd love for you to join us. All right, so let's get right to the point. And, just like in the 2008 and 2009 financial crisis, the big banks were claiming that everything was sound and everything is fine. While they were building their short positions, they kept those CDO derivative bonds rising in value as the banks were collapsing. Once they had sufficient amount of hedge built in, they let all hell break loose. And of course, at that time, Henry Paulson basically threatened the public and the lawmakers, which I believe was all coordinated, that there would be tanks on the street if they didn't do TARP and start bailing out these banks. Well, I think we are at that point with gold and silver. I always talk about the silver slam crew and gold slam crew, mostly silver slam crew. Simply because it's just unbelievable, just the amount of paper shorts, naked shorting that's been going on. And, at this point, the amount of paper shorts that they've been doing, and basically they have been covering those short positions. And I believe they have started to build sufficient long positions and acquired enough precious metals, physical precious metals, including gold and silver, to start warranting these kind of announcements. Especially Morgan Stanley, Chief Investment Officer, favors 60-20-20 portfolio strategy. It used to be 8%, or they just poo-poo that completely. Now they're advocating 20% gold allocation. And we've been way ahead of this game. We've been saying at Galaxy Market for a couple of years now, at least. I mean, we've been stacking gold and silver for so long. I mean, we've been doing it since way back in 2010 after the financial crisis. But anyways, big banks are now advocating 20% gold allocation. They're probably done hedging the slam crew short positions. And if gold and silver's closed last week, and especially on Friday, into the triple witching is any indication, this price movement has just started, and I believe we are moving much, much higher in the coming weeks. All right, so the next thing that we want to talk about is that something interesting to think about. In 2009, in March, we basically finished the market. Market bottomed at 666. Okay, and I know we're a little bit higher. We're at 67.19. That's where we finished. I believe we're going to revisit this level, this 6666 level. When that breaks, all hell's going to break loose. Keep an eye on this on Monday. Let's see how things open up. Okay, so the bond market has completely rejected the Fed rate cut. And if you follow me on X.com, I've been saying, hey, look, the 10-year yield as measured by TNX is moving the other way. And it really has. The whole idea of Fed cutting rates is to move those yield curves down, make mortgage rates and everything come down, and it has not. Rates are going the wrong way after the 25 basis cut point. Okay, and it's not just United States. Bond yields are exploding across everywhere, including Japan, Australia, England, you name it. It's happening. So what does that mean? Well, then you have to watch also this Tricolor auto securitization. This is the same playbook that they played in 2008 to 2009 financial crisis, except it's not in mortgages. It's in subprime auto loans. I don't understand how people making $55,000 a year are driving around in $100,000 cars with payments that are larger than most mortgages for, extending into 10 to 15 years. This is basically next to the student loan debacle that is about to hit us. This is the one I believe is the flashpoint for contagion. And right now, because of lack of regulations and because nothing really was fixed from the financial crisis in 2008 to 2009, it has now morphed into the same rig job game of rating agencies packaging subprime auto loans into tranches of prime auto loan bonds and selling it to investment banks and to pension funds, etc. How do you think this is going to end? I believe there is going to be a contagion. Be prepared. All of these things, kind of swept under the rug, and then it will explode when it happens. Consequently, watch Carvana and CarMax, because this is going to affect those dealers that write their own loans. Because if these guys are doing it, same thing with CarMax and Carvana, they're into the same business. Let's party like it's 2008 again. All right. And then, of course, this should scare the bejesus out of everybody. Bank of Japan owns 70% of their entire Nikkei stock market holdings. That means Japan, the government, the central bank, is the biggest holder of all stocks, bonds, and everything else. People just aren't buying it. And this is a troublesome development. And I believe this is the warning sign, the flashpoint, so to speak. Okay. And they're beginning to sell. And they're selling their ETF, JREIT holdings and stocks in a unanimous vote. Why would that be? Partly because Japan's debt to GDP ratio is above 250%. It's probably more closer to 300 to 400%. But people just don't tell you the actual numbers anymore because that's the way it is. As long as they lie to you about the numbers, then they could keep you at bay and make it seem like they're in control, and they're not. This whole game of cards, a fractional reserve banking system, is coming down. And how fitting is that ahead of Rosh Hashanah? Sell in Rosh Hashanah and buy in Yom Kippur. Rosh Hashanah is this Monday, folks. I want you to pay attention to that. And they are selling. And, and Japan carry trade for a long time was the facilitator for these markets to move higher, apart from money printing. Watch this. Them selling their own stocks is going to have significant impact, maybe as soon as next week, in the global stock market and economy. And of course, last week when I did my video, I said, hey, look, we're stuck in neutral here. We flipped to greed. And so that is one of the signs that we've been looking for. And, the retail investors and traders are going to end up being the bag holders. Okay. We're really at the market top, putting in a blow-off top with a climax run that probably has concluded on Friday into the triple witching. Okay, it is finished, folks. All right, so something that we need to really pay attention to here is that the rate cuts had an opposite effect. We had a 25 basis cut point. We kind of dropped and then recovered, and then we're moving higher. And this is a indictment on the excessive money printing, the broken nature of the demand for our 10-year U.S. Treasury bonds, but also the U.S. dollar, right? We're not even above this inflection point of 97.995. Yes, we're moving higher. That's because people are looking for safe havens right now, but they're just not getting into the bond. Generally, as the bond yield is rising and the dollar rises together, or if the bond yield rises and the dollar falls, that is a very, very bad indication for a very deep recession or stagflation, which I believe is happening, maybe even worse, which will lead to deflationary credit collapse. We're just not there yet, but I think we're at the early stages. Would it be not awesome, but fitting for this to start on Monday, September 22nd, which is the start of Rosh Hashanah? Sell on Rosh Hashanah, buy on Yom Kippur, which is October 2nd. The US dollar and TNX is telling us a different story, that everything is not all well. Okay, so let's look at silver. Silver last week was at 42.68. I said that's a psychologically important level. 42.002 was the level at which we would start a parabolic move. And of course, the slam crew is super active. I think all told, they slammed close to, over the last 2 weeks, almost 320 million ounces of silver. I mean, that's just incredible numbers of money. Just imagine the amount of just short squeeze that is headed our way. Okay, Silver Slam Crew is in serious trouble. There is a gnashing of the teeth moment coming, because this week we not only exceeded into 42, we finished finally above 43 level. Typically, we hit 43.435, but we just immediately sold off. This is a pretty strong indication that a parabolic move in silver is coming. Remember, silver has not participated in the all-time high breakout that gold has and the other commodities have. Silver is still looking for its previous all-time high at 49.49. which was set back in 2011 and once again in 1980 by the Hunt brothers when they tried to corner the silver market and they slammed this crap down. The problem is you can't keep slamming down precious metals that is strategically important metal that is also a diminishing supply metal, and you can't keep it down for the sake of saving the narrative that they're selling you about the fractional reserve banking system. That system is dead. And this is the battle that we're fighting. If you haven't noticed, if you look around, all of the rhetoric from the politicians, assassinations, and all of these things that are happening, which is unfortunate, but bankers create these issues because once they can create a narrative, they can say, well, it failed because of X, Y, Z. They just don't want you to see that the excessive money printing and their policies to enrich the rich and then subjugate the middle class is what's really happening. I mean, all of these people in, BLM and Antifa and all these things, I don't want to talk too much about it, they should really be railing against the people that are paying them, okay? Because it's the banks that are the problem, especially the central banks, right? I always say, and the Fed. There's no use for them, and I think Trump is pointing that out. The Powell looks really, really inept. And, if you really think about it, Fed's real mandate isn't to keep inflation at 2%. It's like social distancing. Where did they come up with 6 feet social distancing? Just like 2% inflation. Is that really true? I think our nominal inflation is way above 18% at this point. All right, so this is kind of my measurement of, minimum measure move on the silver. I think that now that we're firmly above 42 and breaking out above 43, I think it's very possible this coming week that we're going to take out that all-important $50 level and start to run. And I think the target, I'm not saying this week we're going to hit it. It might, but I think it's very possible by middle to end of October before Yom Kippur comes that we're going to hit 75. I think it's going to go higher, but this is a minimum measure move, about an 85% move. If you contrast that to what happened in a couple of days in 1980, silver moved about 625%. So silver is basically a sleeping giant that is ready to explode, folks. Why do I think this phase will go here? Because of these measure moves and based on my technical analysis. We talked about the Hunt brothers. Silver rose 625.43% in 1 month. I think I said a couple of days, but in a couple of days, most of this has happened in a couple of days, and then it just kept moving higher before the banks came in and started slamming it down. Look at that slam. Silver's slam crew was around at that time. It's just not as sophisticated as they are now. Okay. Current model is only predicting for 85.84. It could be much higher though. All right. Well, and not to be undone, gold finished at 3719.4 after hitting 3744. Folks, gold is headed to 4,000. Not this year, not at the end of the year, not next year, not in 2 years. I think this is going to happen before the end of the month. Okay. All right, and the XRP, Bitcoin and XRP should be warning you that a market dislocation is headed our way. So Bitcoin and XRP and all the cryptos are selling off as the markets are hitting all-time highs. So this narrative that somehow cryptos are correlated to NASDAQ is bunk, okay? So basically, cryptocurrencies, precious metals are a hedge against rising inflation. It is a safe haven asset. And crypto's selling off ahead. XRP is now around 2.98 865. Okay, you should be buying these, accumulating these. Don't go out and buy it all at once. Just nibble when it gets to between 2.9 to 2.75, all the way down here. If it ever gets back down there, you should be buying it hand over fist. Not financial advice, but you still, I mean, why are you not buying? You're going to be lined up at $1,000 plus, and when you could have been getting it at 234. It's the same story when it was at 18 cents. Where were these people that are waiting for a pullback, right? And then, of course, the blow-off top formation continues. I had to readjust this line based on our current moves, but it's still within it. We are now hitting that top end of the line. Every time that happens, we have a sell-off and correction/crash. Okay, this one was a little cut short. This is the pandemic. This is back in 2021. Sell-off, and of course this is the financial crisis. And so the LEI leading indicator and coincident economic index ratio is showing us that we are heading into the financial crises. Okay, selling Rosh Hashanah, September 22nd, 2025. Will that take hold? I believe it will. Okay, so let's look at some of these charts real quick. And, let's do real quick analysis here. So we talked about this. Realistically, we're right at that top, folks. We're starting to get into some VIXs. I mean, we trade both long and the short side. We have a lot of long positions and short positions, and they're doing very well, and our community does that. So if you want to join, click the link below and find out how you can become an Essentials member, affordable. I think it's fantastic, right? Here's the problem. Our put to call ratio is at 0.45. This is an extreme range, and from which a sell-off is about to begin. Okay, as the SPY is hitting all-time highs into that 6666 level on the ES or SPX, pay close attention, folks. All right, and then the other thing is rate cut hopes. I mean, we had a rate cut announcement here, okay, and then we get that last bit of that blow off top, climax top run, and folks, what's gonna come? History does not rhyme. It repeats it, but it does rhyme. Not doesn't rhyme. This is the same situation as 2020 coming up. We just went up incessantly and then blow off top, and then in February of 2020, pandemic hit and we crashed. Pause it, get this, and if you want this, then email me at coachbrandon@protonmail.com. I'll send you a PDF of this if you need it, or join the group. Silver is breaking out. Okay, we're basically gapping higher. We haven't seen a gap in silver in a long time. Gaps are going to be a normal thing in the next 2 to 3 weeks, folks. Okay, we're moving higher. MACD is positive. CCI is divergent. We have the stochastics rising. We have a fantastic PPO ADX crush indicator that's bullish. Bullish within a bullish. Okay, we're going much higher, folks. And then of course average true range is about to break above, and so we're going to have some price expansion coming. Okay, here's the silver in a kind of the monthly formation for the last 25 years. This is the handle portion. Here's the cup right here. It's just I didn't want to put it all together for resolution's sake. This is the all-time highs, folks. We're going to hit that probably this coming week. We're going to hit 50 this week, folks. Okay, and then of course gold is in phase 4 parabolic fashion. We're moving up, getting right into this line. Nothing is signifying that we're quote-unquote overbought and we're going to have the significant pullback. Yes, CCI just showing a lot of strength. Yes, at these levels it can be a contrarian indicator, but all the other indicators are basically moderate. And we're having this PPO ADX crush indicator again showing bullish formations. Last time we had these cup formation, upward facing, we moved higher. We're going to move much higher. If you look at the minimum measure move, this minimum measure move will translate. This is called symmetry. And so we're probably right about here. So we have, I'm telling you, we're going to go above 4,000 very, very shortly, folks. Okay, let's look at some of the top stocks. Amazon stalling out with a negative divergence is forming everywhere, folks. Negative divergence is all the way down from CCI to stochastics and to the PPO ADX. We're beginning to form these bearish cup formations. Let's look at Carvana. Carvana is hitting that upper range right here into this kind of this rising wedge with, RSI went a little bit higher. It just keeps moving higher, but we're at the top end. These are the type of stocks that you want to be shorting, okay? And so we're establishing short positions on Carvana in our group. And, PPO ADX is basically saying it's flattened out right now, but it's beginning to form these bearish formations. We're a little early, but that should be fine. And then, of course, we talked about BIDU about a month ago, and we got in, and BIDU has absolutely been killing it. I believe it will continue to do well, even if the market crash occurs. I think it'll pull back, but it may pull back all the way down to this 200-day moving average. But this is a recovery play, and basically a thumbs up on their AI initiatives. Roku is hitting the top end. I don't really understand why it is that they get the multiples that they do. However, the stocks do not lie. It's basically all divergent, and it's ready to go. And then, of course, Apple is the kingpin. Phase 1, phase 2. Okay, and it's probably going to run into resistance right at these levels. So we're getting close. Just pay attention. These are the things. You don't buy short stocks on the way down. You short them when nobody thinks it's going to go down. Okay, Apple is showing mixed divergences, but it is mostly bearish formation. It's stalling out at this point. And then, of course, NVDA, negatively divergent, stalling out at these levels right here. MACD is ready to do a death cross, and then his histogram is coming down. Everything is divergent and bearish, okay? So they had their run, okay? They're stalling out. We're going to start targeting this 20 SMA down into the 50. And all of these are taught in my courses, so you might want to take a look at that or consider joining my community at this point, okay? It's a lot easier to go through this in a community. You get the watch list, stock analysis, any other market updates, and morning commentaries. Why aren't you joining? Okay. I think it's fantastic. Anyways, so let's get through this. I think that's the end of my kind of the stock market analysis. So black swans are everywhere. Rosh Hashanah, selling Rosh Hashanah, buying Yom Kippur. I think we're going to start selling off into October. Gold at historical highs, telling you that there's something wrong, right? The market should be celebrating. They are because of the rate cuts, but everything else is telling you something is wrong. Silver is officially broken out. Japan selling stocks. What could go wrong? Remember the Tricolor thing? I ran out of room, so I can't put it there. 10-year yield is going the wrong way post FOMC cut. Fed is powerless, folks. Silver is going to hit 50 plus this week. You heard it here. Breakout above 43. Stagflation is coming. Gold and silver is warning you something is not right. And Solemn Rosh Hashanah, buying Yom Kippur is going to be in play. Fed is lost. They don't know what the hell they're doing. Powell looks really inept and small. Cutting rates at stock market all-time high. What could go wrong in a blow-up? And it's forming the blow-off top formation. Tricolor Ch7 bankruptcy is deja vu all over again of 2008. Watch for contagion. XRP, XDC, WLFI, Bitcoin, go get them. They're on sale right now, and it's also signaling that something is wrong in the market, right? Cryptos are not correlated to NASDAQ, folks. You got silver, got gold, physical's the best, but you can also go buy some futures options. Watch Apple, Amazon, NVDA. These are the big ones. Carvana, okay, the higher they go, the faster they're going to sell, okay? FOMC sell the news, selling Rosh Hashanah and buying Yom Kippur. I don't know what happened there, but that's what I meant. All right, thank you for watching. Follow me at Galaxy Stock Market. Follow us, like us, share us, and above all, comment on YouTube. And if you want to work with me, you could click on the description below. I have some descriptions about Essentials Group. It's $49 a month. You get watch lists, market commentaries, pivots, any other breaking news. Let's do it together. Okay, affordable. Okay, there are other packages that has a lot more mentorship, and we have courses. So schedule a consultation. If you have any questions, just email me here. I answer all my emails. Okay, thank you so much. Be careful out there. Selling Rosh Hashanah, buying Yom Kippur, go silver. Bye-bye.